Fed is centralized banking. In my opinion, they're going to have to print more money. Bitcoin's getting harder and the dollar's getting softer. This is why I converted over to Bitcoin. It's already been planned out for years. Who gets the cash? I talked about there was God's money, which is gold and silver, and then people's money, which is Bitcoin or cyber cryptocurrencies. And I really think it's important, especially for old guys like me, to understand the crypto world, because that's the world that's coming into view right now. And us real estate and gold guys are kind of being phased out. The old guys have got their heads up their butts. Buffett is anti-gold and anti-crypto. I'm going, give me a break. I mean, how can you be anti-something? And then you have guys like Jim Rickards, a friend of mine, and he says crypto is dead. And so the reason I just love YouTube is I can crank along there, I can search. I'm looking for the other point of view. So we're going to go into the similarities and difference between gold, silver, God's money, and people's money, which is crypto. You young guys are so smart today. You're so far down the road when it comes to financial education, intelligence, but more importantly, it's savvy. You're aware, where the old guys are kind of close-minded to your world. You better check out this world of crypto, even if you're close-minded like the old guys.
Well, so I think that what you've got to start with is whenever you look at financial markets, especially a kind of a macroeconomic standpoint, there's problems and solutions, right? And actually what ends up happening is precious metal investors and cryptocurrency investors, they actually agree on most of the problems, right? So there's no secret that, hey, look, if you print a lot of money, the currency gets devalued, right? There's no secret that there's high level of corporate debt and the federal balance sheet's out of control and all of those things. For the most part, there's agreement. So I won't spend a ton of time on that. The question then is, what do you do? Right. And I think that where there's agreement on the solutions is this idea of sound money principles. Right. And so whether it's gold, silver, or Bitcoin, they all have various aspects of sound money principles. The big question just becomes, gold has, let's say, 5,000 years of a track record. Bitcoin has 11 years. So, of course, there's going to be a hesitancy when it comes to something like Bitcoin. My kind of pitch to people is, look, the one thing that has an advantage, I think, from Bitcoin, or the most important advantage, is there's full transparency and the verifiability of Bitcoin. So you know exactly how much exists, exactly how much is being produced every day, and kind of the supply side of the supply and demand equation is known with 100% certainty. And so it's just a matter of generational divide, right? Older folks usually aren't used to kind of touching all the digital technologies. Younger people are. And so you kind of pick your asset, but they both have sound money principles. And I actually think both of them will do well coming out of this economic crisis.
When the dollar went off the gold standard August 15th, 1971, they could print as much as they wanted. And today they're printing in trillions. Before it was millions, then it went to billions. And now it's trillions. And just, a couple of days ago, the Mall of America, one of the biggest shopping centers in the world, just said they missed 2 payments of $1.2 billion a month. Imagine having a mortgage of $1.2 billion. So they missed 2 payments. The question is, who were those payments going to? And who's going to bail them out? And the Fed has to bail them out.
I mean, look, whenever you get in these situations, that there's 2 things that are important to understand, right? I always say that the U.S. economy is addicted to stimulus the same way that a crack addict is addicted to crack, right? Yeah. You literally can't function without it. And we saw that when they tried to do some quantitative tightening, back in 2018. And then the second piece of this is any time that you get into these recessionary periods, they only have 2 tools, right? The central bank can only manipulate the interest rate, or they can print more money. And so they're using the tools they have, but they've already gone to 0% interest rates. They claim they're not going to go negative. So it's just a matter of how much do you print?
The thing that really, really woke me up was this halving. Now, the reason halving is important is because at the same time, get this is why I converted over to Bitcoin. This is my reason, and it was Anthony that cleared it up for me. is that at the same time the Fed is printing trillions of dollars, Bitcoin is tightening. So Bitcoin's getting harder and the dollar's getting softer.
If you take quantitative easing, right, that is literally the Fed printing money and flooding the market with more dollars, right? It creates a higher degree or a higher number of circulating supply of dollars. So that's quantitative easing. Now, the opposite of that, quantitative hardening or quantitative tightening, would be them actually taking dollars out of circulation, right? And so what ends up happening in Bitcoin is something that looks like quantitative hardening. So there's 21 million Bitcoin that have ever been created. Every 10 minutes in the beginning, 50 of them were distributed into the circulating supply. That programmatically was cut in half 4 years later. So after 4 years of 50 Bitcoin every 10 minutes, it got cut to 25. It then went for 4 more years. It then got cut to 12 and a half. And just earlier this month in May, it went from 12 and a half to 6.25. So the way to think about this is previously, earlier this year, there was 1,800 Bitcoin a day that was getting created and entered into the circulating supply. Now there's only 900. So if you think about the opposite of quantitative easing is quantitative hardening, literally you're getting an artificially capped supply that is becoming harder and harder to get on a daily basis. And so as long as demand stays the same or goes up for that asset, the US dollar value should appreciate. Why are young people gravitating towards this asset is one, it's programmatic, right? Compare that to the Fed. People are betting trillions of dollars in the market on, are they going to print more? Are they not? What's the interest rate decision going to be, right? All that kind of stuff. With Bitcoin, we know with 100% certainty what's going to happen. And then the second piece is that it's programmatic, right? So nobody can go in and manipulate it.
The Fed is centralized banking. So central is also communist. Command and control of a central government. That's communism. Whereas what Bitcoin, gold, and silver are, they're not controlled by anybody. So one of the reasons back in 72 when I started buying gold was because the Fed couldn't mess with it. They do mess with it to some degree, but they can't print a lot of it. And that's what I don't like about saving dollars.
Today, the banks are charging you interest to save money. In other words, banks don't want your money because they printed too much of it. And that's why there's these bubbles in stocks and bubbles in real estate and all this. People are dumping the cash because, as I said in here, savers are losers and cash is trash. And yet people, well, I want a high-paying job. Well, that's an obsolete idea. Get out of debt is an obsolete idea. You should learn how to get into debt, how to use debt to get rich. And they'll never teach you about taxes. The reason the 1% is way up here and the 99% are going this way is because when you print money, two things happen: inflation and taxes.